Hello again. Rather predictably, the fiscal cliff still hasn't been resolved, and I've been to the offices of IG Markets to speak to Chris Beauchamp about the risks surrounding the deadlock on Capitol Hill. So if we wake up on January the 2nd, still a bit of a sore head from New Year's Eve, and there's no solution to the fiscal cliff, what's going to be the reaction of the markets?
Well, I think it'll be the unexpected result, and the result that markets have been dreading. You'll probably see drops across the board, I would expect, in equity markets as investors try to assess where they stand in this new light now that the fiscal cliff has been hit, and we're starting to see the effects start to filter through to the financial markets and indeed to the rest of the world.
But the money surely has to go somewhere. Are there any assets which could benefit in such a situation?
Well, I think the old safe havens would come into play. The yen, despite the impact of the new Japanese government, might see a new bout of strength as safe haven money flows there, because obviously with the fiscal cliff taking effect, US Treasuries will be somewhat ruled out as another safe haven as we try to assess how the US economy will play out in the next few months.
On the opposite side of things, if there is a solution, is it just business as normal? Because it does seem that the markets are pricing in a solution to it.
I would think there might be a couple of days of weakness perhaps. Once again, everyone just wants to sort of work out where they stand. But if we do get a solution, and yes, we are still expecting a solution, I think we could see the ground set for another rally into the new year.
Yeah. What about if we look forward to 2013, and in particular the eurozone crisis? Do you see some positive signs that we could be turning the corner there?
Well, as we end this year, we are seeing progress across the board in the eurozone. The banking union seems to be gaining track. Spain and Italy are on course for the deficit reduction. Despite the problems in Greece, it seems better for the eurozone. A continuation of that is not entirely impossible. Confidence returns, the German economy survives. Then again, it's always the unexpected element that can derail these things, and so we just have to watch carefully for any signs of disagreement in Spain and Italy.
Of course, everything in the eurozone is so political, and Germany's holding its general election. Angela Merkel's up for another chancellorship. What does that mean for the whole eurozone?
Well, I think at the moment you're seeing Angela Merkel try and sort of hold back on any losses for German banks and bondholders. But once that's out the way, you might see a more amenable German government, which could lead to a further boost of confidence for the eurozone.
And what about the UK in all of this? I spoke to Mark van Dorken from Ascendo Markets. He's expecting a 5% uptick in the FTSE next year. What's your prediction there?
Well, we tend to see an improvement in January for the FTSE. After the last 29 years, we've had 17 good Januaries. And what that means is that if you see a positive January, positive start to the year, then the gain for the FTSE, not only we expect a gain for the whole year, but also the gain is likely to be better. It's usually a 7% average for the FTSE overall in the past sort of 30 years. But if we see a positive January, that gain can be pushed to as much as indeed 14%.
Chris Beauchamp speaking to me there. He'll be part of my end of year forecast programme, but for now, goodbye.